Hi everyone, welcome back to our channel.
Hope you have a wonderful day.
In today's topic, we're going to talk about home loans, mistakes that before you apply your loan. That we have done it before, common mistakes that people has done it before as well.
So hopefully this content help you in any way possible when you're applying for your home loan, and try to avoid them if you can.
Yes, then you have a easier journey to apply home loan because it's quite a lot of application and think of things that you have to do.
So the first mistakes that we sort of experience ourselves.
Yep. So not shopping around with lender instead of going through with your preferred bank.
So I understand some people probably, brand sort of, loyalty.
Yes.
When it comes to banking, on the other hand, I probably won't do the loyalty banking.
Yes, because for me, when I first time purchased the investment property, I did not go through with my preferred bank because I was comparing the interest rate, and the other bank I found was slightly cheaper. I think main reason is they do not have as many branches that the main bank has. So that's why the interest rate is lower. And even now, I think even they're more competitive because there are more banks that they do not have branches, only do online. There are some few banks, like I think UBank, VBank, they offer quite low interest rate too.
All because I think it's a minimum outlay, like the admin cost, the overhead is a little bit lower, so they can pass that forward to the customer because they don't have a lot of building, let's say, maybe some of them because it's an online banking, so it minimizes that cost. It minimizes the admin costs, the overhead in terms of rental in a building. And overall, majority of the bank, what I realize is that they all kind of connect back to the big four banks anyway.
Yes, they are from them anyway.
When you look at the underlying, it's like, where who owns this bank? It turns out to be the same bank anyway.
Correct.
So, but
if I have to redo it again, I'll do my research and look for those. They're actually not a smaller lender, it's just maybe smaller brand. I'll go from there.
The next one would be, did not expect lifestyle changes may change over the duration of the loan.
You're talking about us.
So for when we started our journey with property investing, we weren't foreseeing different fork in our life.
We were short-sighted.
Because we were young, we didn't look at the...
We're still short-sighted.
We're looking at the short-term journey, let's say, accumulate as many wealth as possible, but you got to take into account maybe if you're thinking of getting married and have children, how many children you're going to have, your location where you're living. Are you expecting just to forever rent, or are you thinking of, is this your forever home? So there's a lot of obstacle, variable. That's
right. And then I seen we have a lot of friends when they first met getting married, they're getting a small, like 1-bedroom or 2-bedroom apartment. They did not foresee that they're going to have like more kids.
Child.
First child, second child, and then now they have to go for maybe get another place, or they have to rent out the current place and rent another place. So if before you apply it, and also make sure to understand interest rate. Sometimes going up, it's sometimes going lower. A few years ago, the interest rate was way too low, and then a lot of people are struggling now because the rate are going higher.
You have to have some sort of buffer, have an understanding that yes, interest rates are low at the current stage, but at a certain point it will go up. It's just a matter of when. So it's never going to in that low area. Now, I've seen a lot of articles, so where people started on their journey will be at 2% or so, and then now becoming 6%. So that would change dramatically in terms of your your repayment and how is that going to affect your lifestyle. Because you got a higher mortgage repayment, so that means you're going to have to cut back on a lot of things. So the next one,
not getting a loan pre-approval first.
So we did this actually.
Do we?
So we went shopping for an apartment at one stage. We're not knowing like the area, how much within the the scope of the suburb, how much it was, and then when it was actually sold, I'm like,
well, we were just like looking, not getting involved, but we were. It was in an auction, was it? That is just crazy. back in 10 years ago, that house I still remember. It's not that big. It was a duplex, was it? Close to $1 million.
Yeah, and then realizing, guys, hang on a second, we're not even in the market to buy a house.
We were just checking, and it was my first time went to auction.
Yeah.
And then, you have to do pre-approval first, otherwise you don't know how much you can borrow. There are a lot of people, they got trapped because, I like this house, that's what I like. But they don't realize that, I cannot borrow that much. So they're just wasting all this time in going to shop.
Yeah, there's no point of you looking at the property if you don't even know how much you can borrow. That's if you're considering to borrow, like with a mortgage, let's say. If you're doing it in cash, it's a different story. But I'm looking at if you're thinking of investing for the first time and using a mortgage, there's no point of you looking around a suburb that is like, over your budget, let's say.
Yeah.
Because you're just pretty much wasting your time.
Yeah, that's
and
right.
then the next one will be not knowing your fees. Along your journey when it comes to, purchasing a property, there are bound to be fees involved. There's a lot of admin fees that are actually added in there. Understand that you need to know those things.
Yeah, they put quite a lot in there. I don't even know. It's like a list. When you sign the application, and then we realize we have to pay anyway. But just understand there will be like at least $1,000 just to apply your loan application.
Just for the application to be submitted. And then after that, there's an admin fee. And then there's this registration fee. There's that fee. There's a lot of this additional costs that you have to add up. Some of them is actually inbuilt towards your loan. Some of them is like, hey, you need to pay that up in like the first batch or something, part of your application fee. Or if not, some of them is like, hey, here's the loan, here's what you're being approved for, but in order for you to do that, you need to pay this amount.
And the next one, falling for cashback products.
There's a lot of advertisement.
Nowadays, back then wasn't.
No? Yeah.
Not that I remember. I think they're trying to get people apply new loan with them. So they will give you these 3,000 or 5,000 cashback when you apply a loan. But maybe the interest rate is higher. They already calculated. If you stick with me for 5 years, I'll make more money.
Yeah.
Than your cash back.
Yeah. So, and then sometimes like, the cashback is this amount, but technically you don't really get the cashback because that is going to be observed towards your administration costs.
Yes.
So be mindful of the gimmick, I guess, in a sense, when it comes to the cashback reward, transferring from one mortgage to another mortgage. It looks enticing, but overall, sometimes like, okay, you get the cashback, but your interest rate maybe go higher compared to your current one. It'd be best if you maybe just give your current lender.
Yeah, of course. Sometimes they will give you a better deal.
The next one will be not getting the right features. Now, we fall in that trap. At one stage, we're just paying the bare minimum.
I think, you really have to plan for your plan, like your strategy, how and what are you going to do with the property? Is it PPL? Is it investment property? What is your goal? Are you going to try to pay it off as quick as soon as possible, or do you want to just pay the minimum? That what we did, because apparently everyone is doing it. That's the right thing to do. So we did it, but then
circumstances change.
Yes, circumstances change.
You got to change your goal again. For us, we're looking at, hey, pay the bare minimum, stretch the loan as long as possible and whatnot. And then now our circumstances change of, hey, we want to pay it off as quickly as possible, or how do I do it so that way you can pay it off quite quickly. Maybe sometimes you might consider of splitting your loan, whereas one of them is interest only, fixed. And then the other one will be like a certain portion of it, a certain percentage of that would be, paying it off as quickly as possible with variable.
Yes.
And some of them have an offset, some of them doesn't. Like all of those things take into an account of sale. So the next one will be?
Similar to yours, is choosing the wrong mortgage, because you have fixed rate and variable rate. So you have to decide which is the best for you before you lock into your loan, because normally the bank will just assume that it's paying variable. And the next one is you're paying interest only or principal and interest only. For us, we will try to pay principal and interest.
No, in the beginning no,
was interest for only. Us we changed.
So throughout our journey, throughout our personal finance journey, in the beginning it's like we follow wherever the guru said. Just pay the interest only, so that way you can prolong the owning of the property or something because of tax purposes, and then now realizing the FIRE journey is like minimize debt as much as possible. So which means we have to pay it off as quickly as possible.
That's right. And then some of them you may choose to have an offset account or withdrawal facility. So offset account is if you have more money, the surplus of money that can deduct your mortgage, like interest repayment on the mortgage. So it depends on if you have quite a lot of cash, then I think it's a good idea to do it. And the other one, withdrawal facility, we just don't do it because it's like another credit.
That's it.
But it is your option. You have to understand what facilities or features of the bank that they provide to you, and don't choose the wrong one, because once you choose it, they may, for example, we did fixed rate, and if you want to change it, they will charge you a penalty for that.
Yeah, depending how long you've been fixed rate with them for. For us, we like doing the fixed rate because it's fixed amount of money over a certain number of period of time, and you know for sure that's how much you have to pay over the period. Now the only downside with that is we can't overpay. That's some of the features, right?
The fixed rate,
yeah. So they give you like a buffer, or you can pay X amount of dollars, but beyond that, because they're banking on your making the same repayment over that period of time, they might penalize you as well if you overpay them. So depending on your circumstances of work as well, if you're earning a lot of big bonuses here and there, or quarterly bonus, it might be hard. Try to pay that off.
Yeah. That's why people, they sometimes, let's say, split it into half. Half of it is fixed and the other half is variable. When you have a big income, you just pay the variable interest. Then you have a smaller loan amount, which means you pay it faster.
That's it. And then the next one will be make too many applications before you started your journey. So these days, like we went through a mortgage broker when it comes to purchasing a property. That way it's only one application, and they're the one that actually finding out which lenders that is able to
provide you a loan,
instead of you going to do it yourself. Because every time you're actually doing an application, there will be a credit check, and based on how many times you do your credit check, it might be
affect your credit score.
And it will affect your borrowing capacity. So the less you do that, the better it would be.
For us, we normally leave it with the broker. We don't want to do it ourselves. And normally broker, they have a connection with different banks. They will know your scenario, and then they understand which bank will lend you that amount of money, and it's just easier process with the broker. They're making money, and you have an easier journey to do your application. And the last one is you don't clean up your credit. So lucky we were using a broker, because when
that was the first thing that she asked. How many credit cards? Like in the application form that we actually got given, it was like the first question: how many credit cards? How many are there? And how many is the valid?
Loan. How much credit do you were you given by those credit cards, and how much loan do you have with them? So we didn't have any, but she said just cut out few of the card, because that will affect your borrowing capacity as well.
And we did that. So because she knows the ins and outs of, I guess, the bank application. Let's say this was just a preliminary assessment on where you at financially. I mean, yes, we do have a lot of credit cards, because at one stage we went to like an event.
One financial guru told us just get more credit.
Whereas now the mortgage broker is like telling us the other way around. Have less credit.
Otherwise the bank won't lend you money, because when you have that much of credit, which means banks see that you have access, as you can access for those money, even though you're not using it now. Who knows, maybe future you suddenly minus $100,000 in there, so we can't pay off the mortgage. So that's the worry from the bank. That's why you shouldn't have that too many credit cards when you apply the loan.
That's it. So hopefully this type of content, guys, help you guys in any way possible when it comes to making home loan mistakes
before you apply it.
If you like this type of content, don't forget to subscribe, comment, guys.
See you next time.
Bye.